Hi, I'm Ross Mayfield, investment strategist at Baird, and we are back with another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by founding partner and chief economist Don Rissmiller. Don, how are you doing today?
Very good, Ross. Good to be with you.
Good to talk to you as well. I want to start with the thing that has been on investors' minds for a while now, which is a pretty broad topic, but this topic of rates, whether the Fed is going to be continue cutting this year, whether the browbeating from the administration at the Fed will have an impact on that. The Fed meets here next week. I wondered, what's your take on this meeting? What are you watching to get a sense of what comes for the rest of 2026? And do you ultimately expect, the easing to continue for this year?
That's right. I think, Ross, there is a case to be made that the Federal Reserve still has some work to do to get the Fed funds rate to a neutral setting. That's probably slightly below where we are now. But those cuts are not going to come about because of what the White House is doing. They're going to come about because of the inflation data. They're going to come out because of worries about unemployment. The traditional dual mandate that the Fed always watches. That's the reason why policy should be in a neutral setting here, not a setting that creates stimulus for the economy, but not a setting that restricts the economy a whole lot either. So the January meeting is one where there's probably not enough clarity on the data to make a move. And I think this was reasonably well set out over the last month, given the FOMC press conference that Fed Chair Powell did, and given the Fed minutes. So we're looking for a January skip, and that will mean later in 2026, we'll see some policy adjustment. So the Fed waits for now. It doesn't help with what's gone on in the political sphere. That's creating some additional concern. But the primary drivers here are not that. It's the underlying mandate. It's the economic data. It's inflation and unemployment.
Yeah, and you mentioned that Fed policy doesn't necessarily need to be stimulative here. Obviously, there's a lot of stimulus coming from other parts of the policy sphere, a lot of fiscal stimulus. And then we've recently seen some affordability pushes. And I want to get your sense of kind of the broader state of the housing market. We know the administration is working to push mortgage rates lower. We've seen mortgage rates come down. We've started to see some evidence that the housing market might be emerging from kind of a mini recession here. But I want to get your sense of the state of the housing market in 2026 and what more is needed to unlock that portion of the economy that is really not participating